Okay, it's about, what time is it exactly? My watch is like 1:31, so hopefully that's accurate. My name is Jordan, and I'm Municipal Financial Advisor with Municipal Affairs. My colleague I have to do here today is Kauser Kendukar, also Municipal Financial Advisor with Municipal Affairs, and we are going to deliver a presentation, Budgeting 101, and thank you very much for attending. We're just going to give maybe just one more minute to let any last stragglers in before we start. And we have very kind colleague Andrew Wood, who will be managing people entering this presentation. So a big thank you to him as well for administering that for us today. Let's go to we're going to do Budgeting 101. As I mentioned, I'm Jordan. This is Kauser. Kauser, do you want to introduce yourself?
Hi, good afternoon, everyone. Sorry, I'm just in mute. Looks like. No, I'm okay. Yeah, good afternoon, everyone. Again, this is Kausar Khandakar. I'm also a municipal financial advisor along with Jordan. So this is a huge list. I'm in over 96 participants is there. That's why we are not allowing everybody to mic open. So we do have, as Jordan mentioned, we do have chat boxes there. You guys can and throw submitted. Your question is there. If we have time today, we will reply back today and we'll take you all your question and again, we'll come back to you guys with your answer. And please, somebody put the chat box. Is there everybody hearing clearly? And then we can start. Jordan will be start very soon. Thank you.
Yeah, so today's agenda is a jam-packed day today. We are going to go over general concept, which I'll be presenting. Then Kauser will be presenting budgeting within the MGA, and then I will be showing you preparing your budget, and then Kauser and myself will both be showing you a summary and links and where to find the material on the Municipal Affairs web pages, as there's a lot of material there, and it's very useful for municipalities and their councilors. So without further ado, we will start. General concepts. So first of all, what is a budget? Well, a budget is the most important policy council will set annually. It's a statement of the municipality's priorities that sets the spending limits on programs and services the municipality will offer. And it's a political document representing the collective judgment of council. So basically, it's everything that should be spent throughout the year, approved by council. And that's what eventually calculates taxes, and we will get into that. So, purpose of the budgeting process. Well, the purpose of the budgeting process can be related to control, management, and planning. Control ensures that managers stick with their budgets and undertake expenditures that have been properly authorized by the MGA, and that's section 248 of the MGA. So all expenditures need to be authorized within the budget, or should be authorized within the budget. It allows management to compare against previous years and determine the efficiency and effectiveness. So you can compare and just see how you're doing. Here at Municipal Affairs, we always like, when we do a financial analysis for municipality, we always like to do comparisons because you can never really judge a good or bad situation based on 1 year. And a budget also enables municipalities to plan and provide information about future that can be used in making trade-offs among policies and spending. For example, a very common municipality might want a swimming pool and a hockey rink. Well, they may be only to afford one of those. So that's what a budget is for. So other kind of questions that municipality would ask for making a budget are, what are the municipal demands in the future? And that's road, sewer, infrastructure, water treatment. What are the population demographics? Is the municipality growing? Can we afford all this growth? Is municipality shrinking? And will the municipality still be viable in the future? So a lot of things to think about when preparing your budget or budgeting process. So common budget pitfalls. Well, a common budget pitfall is to continue to do in the future as done in the past. One budget pitfall would be, well, we increased revenue in our budget by 2% because that's what we did in the past. And that's what inflation is and all of that. So it would be just following kind of similar rules of thumb that you think are good rules of thumb that you follow in the past, when really maybe times have changed. Maybe inflation is increased like 4%, or maybe we're going to do a big infrastructure this year that we've been saving up for the past 4 years. So you don't always want to necessarily just follow exactly what was done in the past. Other pitfalls would be reacting to situations instead of being proactive and trying to get ahead of situations. Another pitfall would be maybe a budget is too short term rather than thinking about long-term objectives and results. And another pitfall would be councillors and municipalities trying to hold the line on taxes. So trying to determine what tax rate they want and then working backwards in the budget process. We'll get to that as well. So all of those are kind of budget pitfalls, and I'm sure there's many, many more. So priorities. So one of the priorities when doing a budget is there's always limited financial resources that must be utilized to provide municipal services to taxpayers. So no matter where you are in the world, I think there's, somewhat finite or limited resources. So municipalities have to work within those resources to provide the best for their tax base and citizens. And these budgets are they must set the operational and capital items and have priority over each other. So not every capital objective or operational objectives will be equally ranked. So it's important to kind of go through them and determine a process about which are more important than others. Yeah, and building on that, a process should be established to evaluate the competing needs of services in order to maximize the use of funds. So that's priority-based budgeting as well. And ultimately, at the end, a council must decide what are the municipality's priorities. So risk tolerance. Municipality must review what other revenue diversification or other streams are available. So if you look at the municipal income statement, there's more revenue than just municipal property taxes. So there's lots of different avenues and streams the municipality can take to get some form of other revenue. One popular one might be like pay for parking in different areas, like a museum or for those kind of services there. What is the risk of provincial cutback? So municipality establishes a budget, and what happens if there's a cutback in the future? Is that spending still sustainable? And grant funding. Municipalities' grant funding could fluctuate. Can you still afford what you had in the budget originally, maybe some years ago? So lots to think about there regarding risk tolerance. And then tips to improve the budgeting process. Well, municipalities should create a timeline or schedule relating to the preparation, adoption, implementation, and should review the budget and stick to it. Municipal staff should hold departments and people accountable for delivering to the standards and costs decided. And the finance team should project the costs of providing a service over the long term. And the long term, we say, is over 5 years, but it's up to municipal discretion to decide like how far exactly that they'd like to go in the future. So now we will have Kauser present to you budgeting within the MGA.
Okay. So again, good afternoon again, everyone. How we are doing? So far, so good. Please put on your our chat box and how things are going. So budget preparation, as we know, MGA is our, I used to call the MGA is our Bible. So that Bible gave us some guidelines. So we have to follow, municipality must be follow the MGA guidelines is there. So the budget is MGA talking about section 241 and 283. One is telling about the budget, what process we will be following this. So the MGA determine their own financial management practice to the long-term financial planning. So council is the approver of the budget, and CEO's job is to be to administer or administrating to this budget. That means implementing this budget is there. Section 244 of the MGA, it's telling us no deficit budget relates to, as I mentioned, like section 244. There is a need for a policy for on unbudgeted items. So sometimes municipality and emergency or any other situation is there. If they are expense required for them, they need to have a policy. How can they expand it? Kind of resolution, minutes, or something like they need to have those things. There should be a regular reporting to the council. So it depends on the municipalities. How are they? Some councillor, they want monthly reporting. Some municipalities, they are required for quarterly reporting is there. So, and then reporting, when financial reporting, we have another session. We already we have explained, or will in future, if you have, we will explain what will be the reporting. Usually reporting is there as of today's date, expenses, actual expenses, budget items, and the variances is there, and also explanation for this one, what is the reason for some expenses not yet done. So we are not talking about reporting, we are talking about budget this workshop today. So that reporting is, if you guys have any question, then either Jordan or myself, we can send any question, email us. Then we can discuss about the reporting. The budget should align with the strategic plan and other long-term planning documents. The budget needs include amounts to effectively deliver the programs and services council has established, which is water, recreation, roads, etc. Council must ask the question when the budget is presenting to the council. Council shouldn't be only for see the like Excel sheet or something is that they must ask that question: will existing source of the revenue be sufficient to provide the planned levels of the service in the years to come? If the municipality is growing, what new programs will be needed in the next 5 years? And will current revenue be adequate cover these needs? So these kind of question council must be asked when the budget session will be coming. If municipalities, the growth rate is 3%, 5%, or some trend is there, so another 105,000 people is coming in the municipalities, how can they recover this kind of newcomer or new residences put in these municipalities? This kind of budget should be reflect on when the budget, preparing the budget. So that MGA section 248 is telling us like we budget should have some current expenses, which is short term of life, office supplies, fuel, electricity. Some of the recurring expenses is coming, which is essential for running the municipalities. That is the salaries, OIS is there. Each council must establish a procedure to authorize and verify expenditure that are not included in the budget, as I mentioned earlier. All expenditures should be included within the budget and authorized by council. However, there are some expenditure which would be related to an emergency, which is like winter is approaching very soon. If grader is broken right now, but it wasn't in the budget. So council need to be fixed, or administration need to fix this grader. Is there $5,000, $10,000? If it is coming this kind of, so need a policy to this kind of emergency, or we saw that like so many fire it's happen or sometimes flood. This kind of situation is there. How can handle the municipalities? They need to be have policy to spend that kind of money. This is the mandatory for all municipalities. They should have a corporate planning. 3 years for financial planning and 5 years for capital planning is there. The anticipated total revenue and total expenditure by major categories, which expenses is major categories is there. Anticipated annual surplus or deficit, anticipated accumulated surplus or deficit must be adopted by December 31st, or budget must be adopted by December 31st, or interim budget by December 31st. Sometimes it's bigger municipalities or sometimes smaller municipality doesn't have enough resources to complete their budget by December 31st. If it is not possible, it must need to be interim budget to be passed by December 31st. Otherwise, January 1st, there is no way to spend any money, no way to pay salaries or other stuff. So that's why must need to be either completed budget to approve or interim budget by December 31st. So interim budget is usually they adapt for the last year budget is there, so that should be okay for spending next year, I mean the coming year expenses. A capital budget must include the estimated amount for the capital property addition and the allocated to anticipate source of funding for the calendar year. So when capital budget is adopted or doing the capital budget, where is money coming from? Is this money coming from reserve? Is this money coming for grant money? Like MSI, I think that they already MSI changed it, right, Jordan? LGFF fund and also CCBF. CCBF used to be a federal gas fund, but now a CCBF. So those fund, where is money is using for this capital project need to be explained clearly. And council must annually review and update the financial plan and capital plan. This 3 years and 5 years capital plan is not budget. We found some of municipalities, they said, oh, we do have a budget. Where is your budget? Oh, we have a 3 years plan and 5 years capital plan. These are not a budget. These are plan. It should be changed every year. It should be council should be revisit this one. If new item is coming, then they can include, or if any item is not required, they can remove from there. So it should be revisit. This is not a budget. This is a plan. The MG specialist states that like this is the minimum 3 years financial plan and 5 years capital plans. So some bigger municipalities, if you can consider like Edmonton, Calgary, or any other bigger municipality, they do have 10 years, 15 years strategic plan or capital plan is there. But MG telling us this is the minimum a municipality required for having their financial plan. This plan is also telling details our section 283. And then council may also adopt an interim budget. That's we already mentioned this one, if not possible by December 31st to adopt the regular budget is there. So if I can give a little bit elaborate, if a municipality prepared the plan in the fall of 2024, that means now, and passes before December 31st, so that should be included 2025, 26, and 27, not included 2024. Which year is they are preparing any plan, it should not be including the current year, preparing year. So it should be the in future, next 3 years is there. So in summary, if we can say, so if budget was passed before January 1st, 2025, passed by in 24, include the next 3 years plan is 2025, 26, 27. The budget was passed January 1st, 2025 or after, be sure to include the current year and the years to like 2025, 26, and 27. These are operating budget contains the MGS section 243 that provides for the council policies and programs. pay the debt obligation in respect of the borrowing made to the acquire, construct, improve, or improve a capital property, meet the municipality's obligation as a member of the group management board related to expenditure and transfer, meet the requisition or other amounts that municipality is required to pay under an enactment, meet the municipality obligation for the services funded, and in intermunicipal collaboration framework related to the expenditure and transfer. We know the inter-municipal collaboration, ICF, is there, that kind of fund, they need to be cover up this one. So operating budget must show an estimated amount of grant revenue as well as transfer from the municipality's accumulated surplus funds or reserve. Operating budget contains under section 243, and operating budget must include the estimated amount of each of the following sources of revenue and transfer. So these are usually part 10 in MGA section. This is the breakdown for this operating budget. And capital budget is the capital budget control the future debts levels, allowing the municipality to arrange for funds before they are needed. The capital budget reduces the reflection in tax rates in years with high capital expenditure. So, and capital budget, again, section 245 is explaining all these details, how to prepare and what sources is coming from the capital budget. And capital budget contains the section 246. Three key items of the capital budget should be the amount, sources, and transfer. The amount needed to purchase capital property, the source of the funds to purchase the capital property, the amount transferred to the capital budget from the operating budget. That's usually the reserve or something. So they need to finance for the capital project that need to be reflect on the capital budget. And capital expenditure committee's goal is here the develop to determine a list of the priority capital project or acquisition, a long-term capital acquisition plan, a policy on the financing those purchase. Normally, capital spending conveys a benefit lasting beyond 1 year. So if it is less than 1 year, it's most of the I can say the almost every case is the operating budget. If it is a longer, more than a year, it should be the capital project. And a capital purchase result in the acquisition or extension of the life of the fixed asset. It includes vehicle, office furniture, studies breakdown of the construction or engineering projects. So there is a diagram for the capital expenditure financing. As you can see, the like long-term borrowing and then grant, internal finance, and reserve is there. So a capital budget best practice could be anywhere from 5 to 10 years timeline for the planning, construction, and acquisition of capital works. From these plans should come each year's capital budget just to bring up again 5 years requirement for MGA section 283.1. Many municipalities rely heavily on transfer of funds from the current year's operating budget as a way of eliminating or to reduce their reliance on debt. Municipalities provide for a portion of their total annual operating budget to be set aside each year exclusively for capital expenditure, transfer to capital, or current contribution to capital. And capital expenditure request for each items are listed below. A good practice to determine this, like project descriptions. It's a good description is their reason for the project and prioritize ranking, amount spent to date, and balance required broken down for the year's relationship to the municipality strategic plan, total estimated cost of project, financing possible options. Is this grant money? Is this reserve money? Where is money is coming from? Amount saved to date, if you have any saved money, is there effect on the future operating cost of department. Capital items to be considered. Fire truck replacement, equipment replacement, facility management, repair and replacement of municipality offices, hall and garage. Office equipment is there. Example is like photocopier, big expenses there. And water and septic system is facilities that should be following the facilities areas. And again, links between the capital and current budget is there. Pay as you go approach will result in the increase the cost in the year. Need to plan for the cost of this future and how you are the finance them. Borrowing means carrying charges. Using current funds means they increase the taxes. And again, these are like council need to determine their policy to direct these types of the spending, increase operating cost, invoices, utilities, and materials may also be factor. Decision made in both budget must be coordinate. And financial shortfall, as the beginning of my presentation, I'm saying that like section 244 is telling about the shortfall is there. If accumulated surplus equity, surplus minus equity equals 0, then the next year budget must be include an expenditure to cover the shortfall, which may affect tax rate depending on if the expenditure that covers the shortfall comes from either net municipal tax collection or existing reserve. If for any given year a municipality has a shortfall, the minister may establish that the municipality annual budget for the next calendar year. This is the like legislative requirement for the municipal financial capital plans. So it's a regulation is telling 192/2017, and these above links also. I believe, hold on. Okay, so that's the all like MGS section is telling about. So we can give you guys 5 minutes break, and then journal will be continue to preparing the budget. So 5 minutes break, and we'll be back. What time now?
What should we call?
2. So 2:05, right? Okay.
We're gonna. Yeah. So we're gonna start in about 30 seconds. Okay, I'm going to be I'm going to be presenting to you the next section, which is preparing your budget, which will be kind of a summary of what we spoke about in a way. So we're kind of go over it again. Okay, there we go. Tax bylaws. The operating capital budget must be adopted by council before passage of the tax rate bylaw. So yes, the budget must be passed, and once the budget's passed, the municipality can go and institute a tax rate bylaw. They cannot do the previous because the budget's supposed to be decided before you decide your tax rates. And that would be section 244 for tax rate bylaw. So, taxes. So again, with the previous slide, municipality approves the budget, tax rate bylaw, collection of taxes. So, just to go over again, so the municipal assessor prepares assessments for all property in a municipality other than the designated industrial property commonly referred to as DIP. The provincial assessor is responsible for this and sends out the rates early in the year. Municipal assessments must reflect characteristics and physical condition of the property on December 31st of the year prior to the year in which the tax is imposed. Assessment notices must be sent no later than July 1st of each year, section 310. And it's a good idea for council to have an overview of significant changes from the previous year. An interaction between the budget and assessment should be on the budget focus and not on a tax rate focus. So budget requirement, as you can see here, it's a very simple equation to get the tax rate. Municipalities council determines their budget, divide that by the assessment, that equals the tax rate. So for example here, $100,000 budget on $10 million of assessment would equal 0.01 or 1% tax rate. Or change the decimal spot 3 decimal places and the mill rate of 10. So, and again, council should have no control over the tax rate equation. The only proportion council should control are the budgetary revenue requirements. Administration must ensure council is aware of the effects of the proposed budget on tax rates. There should be limited discussion when it comes to passing the actual tax rate bylaw when doing the budget, as the tax rate is simply a result of the revenue that would be required in an approved budget. Yeah. If budget reductions are made because, say, council wants a lower tax rate, council must specify which programs or services will be reduced and not simply ask administration to cut a certain dollar amount. So again, that goes back to our priorities and rankings, as we mentioned earlier, earlier in the presentation. So there's many ways to do a budget. These are just a couple. There's a top-down approach, a bottom-up approach. For example, the bottom-up approach implies that all funds spent last year are kind of necessary and will be spent this year, and just kind of make minor tweaks and changes to what spending was last year. Versus a top-down approach would be determined where the council determines the priorities of the municipality and kind of work its way down from the most important to the least important until they get to a budget that's acceptable and a tax rate that's acceptable for them as well. Assembling the budget. So as we mentioned, you want to have council lists of priorities. Council then to direct these priorities to administration. Administration has to see where cuts are needed if they are needed. And the item at the end of the scale should be the one with the largest cuts based on priorities. So and if it's not a priority, why spend money on it? So again, these taxpayers are paying for all this revenue. Just make sure everything in the budget is a necessary item. So things to think about. What is the budget providing? So instead of simply determining how much the increase or decrease is expected each year, focus on what the budget is providing rather than what is taking away in taxes. If the required services cost more money this year, do we simply have to provide it? Maybe review the service and see if it's a necessary service. The budget should have been created on a necessity basis, and if a service or program is not necessary, maybe you can rationalize cutting it out. And you want to create a document that accompanies a budget that itemizes each department and how they contribute to the community and categorize it as a necessity, a demand, want, kind of thing like that. And as I mentioned, needs versus wants. So if the item is not a necessity, but something simply is nice to have, think about it. If you need to make cuts, that's where possibly a cut could be made. And I know for an example, it maybe be like a roadside garbage pickup. Like it's not needed, but it's really nice to have. So that's why most municipalities have that. So there's lots of services. We could go on quite a while talking about services that municipalities provide. And the last are the political consequences of what happens if we didn't provide roadside garbage pickup. Would council get elected again? You know, maybe not. So there's also consequences to the decisions that council makes within the budget as well. So here are some considerations. So there's many considerations. One of them might be environmental concerns. Again, which you mentioned, roadside garbage pickup could be weekly, could be every 2 weeks. And again, it creates tangible benefit that taxpayers enjoy. It provides convenience and sanitary environment that we live in. Municipalities also have garbage access areas where where residents can drop off garbage. So that's also a nice service to have. So there's many services. So we just again, we just have to decide which of these items, if a cut has to be made, are you willing to sacrifice if cuts are necessary, needs versus wants kind of thing. And basically a summary. So you know, as your municipality, are you ready to implement a change or maintain the status quo? A capital budget is part of the annual operating budget and needs to be considered. Ensure council priorities are clear and understand the impacts of service delivery. Obviously, when service delivery is smooth, citizens appreciate that. But again, many factors that municipalities and councils can go over. And now we will do the summary and links slide, which Kauser is going to present briefly before we go into some links and show you more about them.
No, you can leave it there. That's okay.
Okay.
Just click it. Okay. You just can click it. So yeah, again there is some financial links which is very important for each and every municipality to see some information, submit their report, and they can find tax rate bylaw and other stuff is there. So first link is the Alberta maps and statistics. You can find that maps and statistics is I mean, that's maps. Jordan, I forget which one, maps and statistics, what they can find it from here.
Yeah, there they can find the municipal indicate, well, they can find everything from there.
Oh, everything there.
All
Okay.
these, so-
And then municipal indicators, that you can see the index is there, indicator showing the municipalities is how they are doing. Some red flags is there, tax collections and other stuff is there. So this is the link. You can see, then you can find your municipalities is on-time tax submission, tax collection. If tax collection is under 90% is there, usually is red flags is there, current ratio is below 1, then it's a red flag. So many things is there. And again, you can also compare with the other similar size of the municipalities to find out the measuring index is there. Like if any municipalities like city of Edmonton is maybe comparing with the Calgary and other municipalities. So same thing, the similar size municipality measuring index telling the what comparison reason for the municipalities. They can find out the comparison, what is their residential tax, what is their non-residential tax, and what is the revenue and expenditure, what is the debt ratio. Everything is telling that municipal measuring index. And this one again, tax rate bylaw. So you there is a tax rate bylaw. Also there is a template, and you guys can submit the tax rate bylaw from there. Use the templates is there. Smaller municipalities is sometimes hard to have their own templates, and so that you can use this template as a sample. But municipalities feel free to have their own tax rate bylaws, which is easier for them, but that's definitely helpful tools for them to use. And this is the finance overviews there. So which is right, statistical information return, annual reporting, tax rate bylaws, and also MileNet is submission of your capital project and a submission of your reporting, capital project reporting. So most of the finance people and municipalities, they have an access to the MileNet is there. So and this link for using for submit their reporting and check their status of this any capital or operating project already submission. These are, as we mentioned, like 3 years operating and 5 years capital planning, and there is also templates for using. And again, municipality feel free can use their own tools, but that is the definitely helpful tool for using as the templates and simple way to Excel sheet. They can use it for preparing that 3 years and 5 years capital plans. And financial aid, there is a link for financial aid. So we are not working financial aid, but in MA, the other department, there is a link to bringing to those people, and then have all information to how do you access for the financial aid for the municipalities. You can use this link as well.
Yes, so now I'm gonna go over some of the links that Kauser just mentioned and show you where to find them. So before we start, one that wasn't mentioned, and it's not really for budgeting, but I wanted to bring it to your attention is am I sharing my screen? Am I sharing the screen still?
You are sharing.
Okay, great.
I can see. Yeah.
Is this in a Google search Alberta loans to local authorities? The first link here is really good that Alberta Treasury provides. It will provide you all of your borrowing bylaw information if you ever do want to do a borrowing bylaw and borrow. So going to the links that Kaz was mentioning, the main one here is in Google search Alberta Maps and Stats. If you click on the first link here, Alberta Data and Statistics here, and as Kaz mentioned, this website here is where you can find all of the items he mentioned. So you can find their financial statements and tax rate bylaws for every single municipality here. You can find the municipal indicators here. I'll show you those. And then you can also find the, for example, municipal measurement index as well. Indicator results. Then, so as Kelsey mentioned, every year municipalities submit along with their financial statements a financial information return, which is a large spreadsheet that captures a lot of financial items. When municipalities submit that to us, it gets uploaded into a software system, and then it kind of takes all these numbers and spits out the numbers and into these various metrics here. And if you take your mouse and hover over each metric, it will show you how that formula is calculated, which is kind of cool. So as you can see here, this is Acadia, but we have every municipality here for many years. So you could see, for example, the village of Andrew, and you can compare the municipality over the years and how their indicators change.
Yeah. So sorry to Jordan interrupt you. As you can see, the like tax collection is 87.47% is a red flag. That means if it's below 90%, it's automatically showing the red flag is there because they are below the threshold. But again, the right side, you can see the current ratio. We are not picking the like any specific municipalities, but for illustration purpose, for example purpose, we are showing. So that's the red flag. And also on time, as Jordan mentioned, not submit the on time is there, which is the due date. Due date is June 30th, right? May 31st, sorry, May 31st. If it is not submit by May 31st, and then after that, it should be showing the red flag for the submission date is there. Sorry, Jordan.
Yeah, and then municipal indicators also shows you kind of, if you want to compare years or municipalities that have flag, you can compare as well. Going back to the other one we want to show you was municipal measurement index, and here you can also compare your municipality. You can compare any municipality against municipalities that you choose, or which municipalities the system approves. So when municipalities submit their financial information return, it calculates an index number or a range figure. So for example, and the larger the range, the more comparisons we'll have. So we always try to like reduce it to maybe just 1 or 2. So if I shrink this, so it will take all the municipalities that have an 89 index. So for example, we compare here, and basically just randomly 89 is Chestermere, and Chestermere just has 1. Or it's the only one for 89. So we would just go back, maybe put 89 and 90 and see what happens. And we should get more comparables now. So you can kind of see here, these would be the ones that have 89 and 90. However, you're not limited to just the index. You can choose whichever municipality you want to choose. You can open up the range all the way, and then you can select any municipality you want to choose with whichever municipalities you want to choose. So that's municipal measurement index.
One more thing, Jordan, how do they find their indexes? Can you please go back to the previous screen?
Oh, sure.
Yeah.
Yeah, sure. Yeah.
Back.
Right.
So yeah, now index. Yeah, you can show them. So how can they find their municipalities?
Yeah, so to find your index, you would go to the main page there, click on index, and then for the year you want, most recent year, 2023, you can click on, or you can find it. So for example, Wheatland County is 102. It's going to include all of these 102 as comparables. But again, you're not limited to just the same ones. You can choose whichever ones you want. And there's much more than just, so you can compare residential tax rate, non-residential tax rate, all these, so composition of assessment, municipal debt per capita, revenue expense per capita. So there's lots here that you can choose. Just be aware that per capita uses a census figure that I think is a federal census, and it doesn't update that frequently. So just be aware of that as well. The other major website we wanted to show you, if you search in Google, this is Alberta Municipal Finance Overview. And if you go to municipal finance, municipal finance statistical data heading there. We have a few items on this page worth noting. We have a tax rate bylaw webinar and case study here. Very helpful if you're doing a tax rate bylaw for the first time. As we do collect tax rate bylaws, I believe our management information services team will be sending out tax rate bylaw templates for municipalities to fill out as well with their tax rate bylaw, because there's really no standard approach to do this, but we're trying to make it somewhat standardized for just ease of information gathering purposes. And lastly, I wanted to show you those financial information returns that municipalities submit, the big Excel spreadsheets. When we collect those, they all get compiled into a big master sheet that gets uploaded or refreshed every couple months or so. And it basically it's very good for comparison purposes. If council ever asks their municipal admin to compare whatever municipalities, or to find some data of their own municipalities. So for example, you can see here that there are sheets for all of these things, and every municipality is listed on every sheet. So you can filter by however you like. You just highlight the row, data, filter, and then you can choose you could choose whichever you like. For example, if I just want cities, there you are. However you want, it's very easy. So that's kind of lastly what we wanted to show you today. Going back to the PowerPoint. And now we will end for any questions. So let's look at the chat here.
And Jordan Andrew can unmute if any question, anything you found, and Andrew.
And if we don't get to your question today or don't know your question, all of the questions are copied and written down, and we will get back to you in the near future with your question. So if you have a question, and I'll just write it in the chat, please, and we can try to answer that. I don't see any questions in the chat right now, so I'll give it maybe just 1 minute.
I can't hear anything. Somebody said, okay. Yeah, I don't think.
I don't see anything. So it looks like there's no questions coming in the chat. I'll give it maybe 10 seconds if there's any questions coming in the chat. More than happy to answer any questions you might have about budgeting today. And anyway, we are available. Feel free to email us, call us. We're here for you. We want to do whatever we can to answer your questions and help you guys with your municipalities. Other than that, have a wonderful day, and thank you for attending. Really appreciate you attending today. And we can end